Right, good morning then everyone as we head into another day of trade on Thursday the 11th of April. Unless you were living under a rock yesterday, you'll have seen US CPI beat consensus across the board yesterday, so stronger, higher than anticipated CPI on all four metrics. We'll have a look at the calendar once we get around to it, but all the news articles across all the different news sources will be talking about US inflation beating consensus and then markets winding back rate cut bets. How long that ends up lasting in markets is another question. I mean, you look back to last Friday, strong NFP, right? You had a strong actual NFP print. You also then had a strong unemployment rate, so strong labour market figures wherever you looked last week on Friday, and then euro dollar then rallies 100 pips into Wednesday into a anticipated or what was to be an anticipated, certainly in my opinion, a hot CPI print. Right? How long then this higher than anticipated inflation print lasts is anyone's guess, because when you think about it, the stupidity of euro dollar being 100 pips higher post NFP into a hot CPI is, beyond stupid. But anyway, that is how markets traded. That's how markets reacted. And now we're in a situation where all that move was reversed in a number of seconds. So massive upside in the US dollar, big downside in stocks, big upside in yields. Exactly how you would expect markets to move off the back of a strong CPI print. Which the fact that markets moved that aggressively doesn't mean markets were kind of looking for that. I was definitely looking for it. That's exactly what I was hoping for. That's exactly what we got. I don't know what other people are looking at, but that's the research that I had. And yeah, how long that lasts is again, as I said, another question. But rate cuts or better rate cuts in markets have seemingly gone down from 3 cuts this year down to 2. Does that continue on further to 1 and then to 0? Let's see how markets trade over the coming weeks. We do have the Fed again on the 1st of May. We've obviously got a couple of weeks trading before we get to that point, so we have a number of other economic data prints to go off before we need to make a decision on what the Fed will do in May. Not in terms of whether they will cut interest rates or not. That's not a question. What is the question is, do they then backtrack on the 3 cuts, or do they, in my opinion, stupidly or delusionally stick to the 3 cuts? So let's see what they have to say about Kashkari and Bostic. They don't agree with the 3 cuts. Let's see if Jerome Powell decides to fly the flag solo. But apart from that, there's not much other really to talk about in markets. You can have a look at oil prices edging up on escalation in Middle East tensions. In terms of escalations, it's just a lack of ceasefire talks. So they were hoping for ceasefire talks, and they have kind of been backtracked on a little bit, and a couple of Israeli strikes and stuff. America saying that Israel aren't really doing enough to help with the US effort in Israel. But anyways, more important fish to fry in terms of markets. Obviously, I'm talking about markets, and that is how we then react to the inflation figures from yesterday. But you can see markets this morning relatively quiet. You can see stocks across the board, US equity futures up, couple down, but then you look at the Nasdaq, which has moved by the most amount at 0.06%, so we're not going to look too much into that. European equity futures, not going to look too much into that. Asia Pacific equity futures down, kind of playing a bit of catch up from the US in yesterday's session. Commodities mixed, bond yields mixed. Some of these are zero. I kind of sort of half think my platform's broken looking at some of this, but just a lack of movement across the board in today's session so far. US dollar mixed, Aussie Kiwi slightly higher, but again the Aussie Kiwi are slightly higher, not exactly by much. Swiss franc lower across the board, which is obviously somewhat understanding. You come across to this, you can see yesterday CPI beating consensus across the board. The Bank of Canada didn't really play ball. Cliff Macklem did come out and actually play ball in his press conference, saying there is potential for a June cut, kind of what we were hoping for. We didn't get that in the initial statement, so probably what they wanted to achieve. Really, they come across maybe somewhat hawkish, or maybe not hawkish, but didn't really confirm any progress on the interest rate cuts from any interest rate cuts, or no progress certainly on at least talks about interest rate cuts going forward. Kind of backtracked on that, and then the press conference comes along and they said there's potential for a cut in June. So with inflation being within their target band two months in a row, that is a situation where they can go and at least begin the discussion on interest rate cuts. Did note yesterday that there was potential for them to kind of reverse jawbone is probably a word for it, but to kind of not want to come across too dovish to risk sparking any sort of a move in inflation. So that is understandable from the Bank of Canada's point of view. And then we come on to the ECB today. You can see the ECB 115, also PPI at 130, 145. Again, the ECB. I mean, with the PPI, with CPI yesterday, with rising commodity prices over the course of the month of March. I mean, market consensus thinks 0.3. We also had the 0.6 in February, and also then a 0.3 in January. So nearly 1% of producer price inflation so far this year. 0.3 still would be inflation, rising too fast. That would be, once you add those figures together, would be 1.2%. But that is 0.3 above the 0.6 from last month, which is 0.6 above the 0.3 from the previous month. So not really a situation, not exactly a situation where they're making any progress on inflation or making enough progress on inflation. So it's maybe a little bit of a tricky one today, but I mean, PPI, that certainly comes in interesting. If that beats consensus as well today, that should have a similar reaction to the movements from yesterday. So we'll cross that bridge when it comes to at 1:30. But again, I'm still going to stick to the same script that I had yesterday, the same thought process that I had yesterday. So there's not a lot we can really do with that from now until then, I think. But I still think, as I said, you got to stick to the same script as yesterday. But the ECB then, right? ECB market consensus is that they go and lay the groundwork for a cut in June, and then if they go and lay the groundwork for a cut in June and start to give us an idea that we will actually get it in June, that should be negative euros, for obvious reasons. But they said at their last meeting that they wanted to wait until wage data from Q1 came out, which they receive in May. Obviously it is still April, so wouldn't surprise me at all if they backtracked on it and said it was a little bit too premature to start talking about interest rate cuts. But the economy in Europe is certainly nowhere near as strong as the economy in America. There is more of a need for the ECB to cut interest rates, and they will want to cut it as soon as possible to get policy back, or to get the interest rate back to a more neutral stance. These interest rates are not neutral, they are restrictive interest rates. So the central banks do want to cut interest rates to get it down to a more neutral rate where it doesn't affect the economy too long in the long run. ECB closer to being able to do that certainly than the Fed are. Euro dollar is probably a good sell off the back of this today. If they do come out and talk somewhat hawkish, I think the market can look past that. You still might get a spike higher in the euro, but I doubt that'll be a longer lasting spike. You look at inflation yesterday, that's probably a more longer lasting move in the dollar than any spike higher off the back of the ECB will be today. So I think if euros go short off the back of this, you'll want to be short euros. If euros go long off the back of this, I'd probably steer clear of it. I doubt they can say too much to really make it a longer lasting move higher, as they will want to cut interest rates and do have a situation where they can't cut interest rates. So we'll cross that bridge when it comes to disinflation continues in the Eurozone. It's back within the 3% target across a number of different countries. So certainly an easier situation in Europe at the minute than it is the US. Then that comes into PPI. I mean, if the ECB comes out somewhat dovish and then PPI comes out and beats consensus, that is an easy sell of euro dollar. It's not exactly easy to navigate when they're 15 minutes apart, but like from a risk to reward perspective, I think it's being short euro dollar into it makes sense. I mean, it made more sense to be long dollars into CPI yesterday, but ECB, I'll let you come to a decision with that. But I'm sure if you listened to the videos yesterday and you had a good trade on CPI yesterday, maybe it's worthwhile keeping the money in your pockets and looking to play this after, when you can reevaluate what's actually happening. But apart from that, not a lot to go off today. Disinflation continues in China. You can see minus 1% month over month inflation, which it has the potential to feed across into the rest of the world. Certainly isn't for now, certainly when you look at the US side of things, but they've been struggling with inflation for a while and it hasn't affected the rest of the world. So maybe we can just leave that one out and move on from that, I think. But ECB PPI today, main focus of attention. Is it worth a trade? I mean, if the ECB come out dovish and do lay the groundwork for a cut in June, then I think it's worth being short euros. If they don't, I don't think it's worth a trade, certainly from today. And then you can focus on the US data at 1:30 today, and then probably avoid euro in that eventuality. But we'll cross that bridge when it comes to it a little bit later on. Best of luck if you're trying to trade it. Another couple of days left of this week, but don't go mad and blow all the profits you made yesterday if you made some.